Yo, yo, yo. Welcome back to the channel. For those of you who are new, if you like the content, the best way to support is to watch the video until the very end, comment, and like on the video. So make sure that you watch till the end so that you can make a good comment on the video. That helps the channel a lot, and it's completely free to do. So I wanted to give an update on this Wyckoff accumulation schematic that I believe we're in, and how we're doing in reference to this, because I know I made a video about it this morning about my expectations for today, as well as, yesterday I was talking about this and the day before. So I've been talking about it a lot. And well, actually, the crazy thing about this is actually the May chart. This is the May chart. So this was right before the blow up in June. And actually, this is the chart that we're in now. So this is actually where we stand after today. I was doing that to troll you. This was an inside joke with the live stream. They're all watching right now. I let them in on the joke and everything like that. So hopefully it goes over well. If not, it's all good. Look, it could be a corny ass joke. It's all good. It doesn't bother me. Anyway, so yeah, so I think that we got good news today. Today was a down day for AMC, kind of like I was calling for. This morning, if you watched my video, I did the fib retracement here. I said that I was looking for some downside on the open. I also posted this on Twitter and in Discord. If you're not in my Discord yet, I have a new Discord server that was started. It's going to be in the description of this video. But basically, we hit our 0.618 fib retracement for this most recent move. I was saying that there were two basic scenarios that could play out. We could either come down, test our golden pocket here, or we could run down and test this potential long-term bull trend, the white line, as well as... Oh, shit. I'm too far zoomed in. As well as the top of this falling wedge that we recently broke out of. We got pretty close to testing the falling wedge if I chart it this way, but we didn't get as much downside as maybe I was expecting to see or wanted to see. So that brings us into let's talk about the Wyckoff schematic for those who don't really aren't familiar. Let's do that briefly, and then let's talk about where we stand with it. So, and then we'll compare it to the previous run as well. I think that'll be interesting for the video. So basically, the Wyckoff accumulation schematic, I think it's Wyckoff or Wyckoff, I don't know how you pronounce it, is a study on how institutions accumulate and distribute assets. So an example of this would be here at the top. Institutions were distributing AMC stock at a what they thought was a high price at the time. So there's a lot of sell pressure here, right? And then you can see this is where we most recently got rejected and sent back down. And this is the accumulation zone where they are accumulating very bottoms. And what this is meant to do is exhaust retail out of their position. So institutions are using this to put sell pressure on, make retail sell at the bottom, and then get retail hyped again so that they can buy at the top, and then the cycle repeats itself over and over again. And then this is just a study of how you can use these patterns to kind of see what institutions are going to be trying to do next. So it is my belief currently, like my opinion, that we are in phase C of Wyckoff accumulation. And again, we can go look at the May chart as a point of reference. No, this isn't the right one. Sorry. Give me 1 second. Don't say you're sorry in the videos. And you can see a similar pattern kind of play out. We can put these side by side. Let's do that. And it is a different time frame. Well, actually, these are both daily charts, but it is taking a little bit longer on this side, but you're seeing the same sort of pattern play out. Some things to take note of is this move down from $12.25-ish on April 27th to the bottom on May 6th when it was $9-ish, 8.50 to $9 range, was 27% down. And this sell off, which would be like the similar representation. Oh shit. Similar representation on this chart was over 30%. So a much more intense sell off. And I think that what that represents is that emotions are just much higher. And in a lot of ways, that volatility can play two ways, right? So because you have so much more volatility to the upside and the downside, your moves are going to be much more explosive. So in a way, if you're a bull that's looking for a run on AMC soon, it could be a good sign for you if that's what you're looking for. If we do complete this schematic. So where do we stand right now? Like I said, I mean, this is pretty much what I was expecting to happen today for the most part. If you watch my videos, I kind of broke this down. I believe that we're in phase C, doing an LPS, which is the last point of support, I think, is what it stands for. It's not so much, it doesn't really matter what it stands for. It more matters like what's going on, right? So this is like a transition period where now, and if I could just find my path, where now you're starting to see a little bit of sideways price action, right? A little bit of volatility happening. And then what I'm expecting is you get one more break below before you start to move up. And the reason I think this is because I think that if I was an institution, and you got to put yourself in their shoes whenever you're doing this, if I was an institution, what I would probably want to do is have this trend line be emotional support for bulls, and then break it, scare them, right? And then you get your upside. You get the cheapest shares possible. This isn't an exact number. This came down to like the 32. It could be really what I'm looking for. If we really want to measure it, is a fib retracement level. So what does that look like? So fib retracement level would be the 786. So in the next couple days, this is what I'm looking for. And we might get some sideways action tomorrow after such a big red day. But at some point this week, I want to see AMC come down here, and it would just be perfect. It came down here, tested this 35-40 kind of zone, and then started to make its move up. Held this as support. This would confirm that this now is a bull trend, in my opinion. You have a few touches back here. You only got one touch up here and no other touches in between. So that's why I always refer to it as a potential bull support line, because it's not necessarily yet, but it could be developing into one, and it fits in with the LPS, the last point of support, in this schematic, right? So that then what happens is it doesn't get so explosive, but you get some of this. Maybe you come down, test it again, and then you go into your sign of strength where you kind of break above that previous high level, and then you have your markup in phase E. So this is how I'm reading it at this time. Obviously, nothing in here is financial advice. All of this is subject to change. I can't predict the future, but this is how I'm seeing it currently. And this is pretty much what played out back here. If let's just look at it again. So similarly, last point of support, and also I had this bull trend here. Maybe this was a similar psychology that was going on, where bulls were going, hey, look, we got a bunch of touches back here. Maybe this is a bull trend. You come back here, you test this last point of support. Then you go to your sign of strength, you have a little retracement, and then you're ready for your next big move up. So I think that the similarity is undeniable, and the past doesn't owe us the future, right? So you should always be responsible. Be careful with your positioning, and don't do anything irresponsible. Just because this looks really good and it looks like this schematic and stuff does not mean that it's guaranteed to happen, okay? So again, it's not financial advice. Also, if you're familiar with the channel, you probably have been following the Elliott wave and the Fibonacci on this, what I've been calling a wave 1. Let's see. What I've been calling a wave 1. So everybody's familiar. That is returning to the channel, but if you're new to the channel, this sort of move is what you're looking for, you know, on a longer time frame. And just to explain how we are figuring that's happening, the most common retracements for a wave 1 in Elliott wave. And the reason we're doing this is we're confirming multiple theories to make sure that our theory is valid. And again, this doesn't promise success, but it's always good to check yourself with different theories. Only having one theory, you know, you could leave yourself blind to a lot of things. So you had your 0.786 retrace, which is the second most common retrace after a wave 1. The first most common being a 0.618 retrace. And so basically, you know, I'm looking for price to turn around here in a big way soon. And soon is relative, right? It might not happen tomorrow, might not happen, you know, in a couple weeks, whatever. But relatively soon, it seems like institutions right now, in my opinion, based on this schematic, institutions are basically just trying to confirm these levels as price support right now for their next move up. As long as we're maintaining higher highs and higher lows on these more macro moves, we're bullish. So that's the way I'm looking at it. So if you enjoyed the video, I appreciate your time watching the video. Thank you guys for the support on the live stream today. It's been so crazy. I know you guys are still watching, a lot of you. Thank you guys so much for watching until the end of the video. Make sure that you comment your thoughts down below, what you think of my theory here, my thesis. And other than that, yeah, drop a like on the video. Join the Discord down in the description down below. And I think that's it. You can follow me on Twitter at David Marino Jr. Yep, that's it. So have a good rest of your day. Take it easy. Don't take this as the gospel. Do your own research and have a good freaking rest of your day, dude. Wait, it's not the weekend yet. Sub has the boss. I'm talking to chat. You guys should subscribe and turn the notifications on so that you can hang out in the live streams going forward. All right. Take it easy, YouTube.